All right, welcome everybody to the Futures Trading Room for Friday. It is June 5th. So welcome, beginning of summer. All right, markets dumped already today, like 400 points. Incredible morning dump. So we missed that. So we're going to have to see what's available for us on the afternoon session here. We may go into a range, it may be a little bit tricky. I always say I think the afternoon session is a little more difficult than the morning because in the morning, you can look for manipulation, the power of three, it's much easier. But in any case, we'll see what's available for us here this afternoon. But welcome, give us a like, all right, helps the channel. We just started futures trading recently, so this is kind of new. I'm not so sure, I might want to change the time and do it in the morning instead of the afternoon. I have another webinar I did this morning, so I'll have to see, I'd have to change things around, but that could be in the works. And we'll certainly see how that pans out. All right, so let me just go through the administrational items here. Let's see, we'll go ahead. Let me just set this thing up so you can see the screen. All right, so first thing I want to go over are the risks involved in trading. Like I always say, without risk, there is no opportunity, and that also pertains to the markets. However, you got to be smart about how you handle risk. And this is where most people go wrong, especially when they're new in the business. They don't understand how important risk control is. And it really is everything. There's many, many different ways people trade the markets. And I'm not here to tell you what's better or not. If you found your groove, that's great. As long as you are profitable, that's really all that counts, right? But risk control is a very important aspect of any trading system. And so you always have to use it. And that means use a stop. And that also means varying your position size based on how much risk that stop that you need to place based on market dynamics really is going to affect your position size. So keep that in mind as well. Always trade with money you can afford to risk. Now, if you're trading a prop firm, please realize that you may have a $50,000 account, but guess what? You really only have the amount of the trailing drawdown. And so in today's environment, what is that, 2,000 bucks? Okay, so that's really your account size. So don't think you have a $50,000 account because you don't. All right, it's 2,000. So your risk control has got to be tight on that 2,000 or you'll lose the account. All right, so keep that in mind. Today I trade a simulated account. Okay, we're not trading real money. We're not trading a prop account. I do all my presentations live like this with a simulated account. And that's just the way I perform it, because in case there's an issue or something while we're talking about the education part of it, we don't get screwed up on a real account, so to speak. All right, so keep that in mind. Past performance doesn't guarantee future performance. Use this as education. All right, we're not giving financial advice here. That's really important. And also realize we deal in a realm of probabilities as well. All right, so nothing's guaranteed. All right, I've got several books here. There's a few commercials I'm going to do to plug my website and plug the stuff I'm selling here. But please realize that I have books available at Amazon. Okay, so those are available for you. My latest book, The Art of Trading, covers pretty much everything. It's a big book. I tried to encompass this latest book to include risk control and include various technical aspects of technical analysis in that book. Very popular book. You can read the reviews on Amazon. And again, I'll put a link for all this stuff up in the recording, but I just wanted to mention it in case you want to double back and check on it. Now, I use software I created a long time ago called the Applied Reality Trading Software. Now, I used to, I've been in business now for over 30 years. And I used to work for a brokerage where we managed short-term trading accounts for wealthy clients. And I was basically using the ART software, but not as a program, because back in the 90s, it wasn't prevalent really like it is today, that we had automated algos and things like that. So the institutions did, but the smaller operators did not. And so we did pretty much everything by hand. And then in 2003, we came out with the first version of the ART software, and we've expanded upon that to include various other things like the OWL, the PTF TLM. And I have videos on how all this works. but it's great software. It's being used now in over 85 countries worldwide by hedge funds, private investors. We have also risk control software too, and scanners. So pretty much all that is available for you. And again, I'll put a link down below if you're interested in it. All right, so take a moment here before we get going. Give us a like, okay? And also, too, don't forget we have the Market Opportunity Report known in the industry as MOR. And the MOR report basically is a stock picking service along with a weekly summation of the markets and forecast of the major indexes. Great report. We've got a lot of great feedback on it. And so I'll put a link for that as well. And then we have a freebie that we do on the second Saturday of every month. So this will be not tomorrow, but the next Saturday, the 13th. You can certainly come back and visit us here on YouTube for the Saturday Trading Education Workshop. And that is at 1 p.m. Eastern Time or 10 a.m. Pacific Time. All right, so that's all the info commercials that I wanted to do before we get started. And you can check out the dump we've had on the NASDAQ. And so, you know, this always makes it a little difficult in the PM session after you have a big move, because the market can tend to go into a range here, and or it could do a total reversal. So we got to wait. I don't want to go short anymore unless I get a pullback to go short. You know, the market could just continue to tank, but I don't want to, you know, basically FOMO into this. And honestly, if I was probably trading earlier in the day today and didn't have all these webinars to do, I probably would have been short. I would have been probably getting ready to call it a day because what a day it has been. So we're kind of going to be left with the dregs of the market in the afternoon. We'll have to see what we can kind of ferret out here for some good moves to the upside. So I'm going to go to full size chart so you kind of can see everything really good here. And let me get my pointer taken care of here because that helps me highlight stuff a lot better. And let's wait it out. All right, let's be patient and see if we can get some form. I think we're going to get some form of retracement here. We certainly have not recently. I mean, it's dumped 400 points since this area here at roughly 1030 all the way up to where we are now, 1 o'clock. And it's Friday, okay? So that's obviously probably going to be the biggest move of the day. We could get a retracement. Is it possible to get a V shape all the way back up? Possible, all right? Anything's possible, but we'll certainly see. Now, our indicators here, look at a couple things I want to point out here. First of all, I'm going to go to the daily chart. This is the 15-minute chart on the right and also the 5-minute chart as well. So I've got various time frames here, all still bearish. Now, what I want to point out here is when this thing started breaking after the open, okay, we had our first P pyramid, not NP. These are NPs indicating corrections in a overall downtrend. But our P pyramid kicked in after the open right here. So that would have put you in around 29,800. And our stop right now would be right here at about 29,455. So it captured that move beautifully. What the pyramids are doing is they're looking at price action, and they're looking at the momentum that goes into creating this price action. And these pyramids are basically fractals in the market. And you know, there's a lot of information on fractals. You have Bill Williams out there that talks a lot about fractals. You know, basically, that was my first introduction to it. And then I expanded on that by creating these pyramids where it actually looks at the momentum in the market that creates the fractal pattern. And from that, okay, I found it to be an excellent way of ferreting out, you know, high probability fractals versus low probability fractals. The other great thing too with using this type of dynamics in the market is you enter when the point is broken and your stop goes above the top. And then you adjust your trade size based on how big the pyramid is. And when a new pyramid forms, okay, like it did here, all right, you move your stop down. And the P pyramids are your primary pyramids. The MPs we can use for scaling out or just letting us know we're getting a little bit of a correction of an ABC pattern in the downtrend. but the overall position would be short with the stop here. Then we move our stop here, then here, then here, then here. Each time a new pyramid forms, we ratchet our stops down. And look how effective that was. Now, if you compare this against, this is a 20 SMA, which I like to put on the chart. But if you use this primarily as a stop out point, you would have been stopped out here, okay? You would have been stopped out here, 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 probably not there, and here. So I found that the pyramids to do a much better job of keeping you in the trend and allowing for price action and manipulation in a trend to play out. So basically, every time there's a manipulation in the trend, like here, 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 that's exactly what the pyramids are looking at. And when price continues down, then they know that's manipulation, and we move our stops down to those key levels of area. So if you're trading anything, smart money concepts, trends, whatever you're trading, okay, the pyramids can be a great aid of telling you where to put your stops. So that's one thing I kind of like to make clear on that. The other indicator you see here at the bottom, this is the owl, which is for momentum, and this is the PTF. And the PTF has an approximate 75% accuracy rate, which means when it's red, there's a 75% chance that the market's going to return and go below the lowest low in that red area. And it just did that. And now it turned yellow, which is neutral. Okay, you can still stay short, but it's not a bad place to possibly take off a few contracts, because that also means it took some equity out there too. And we're seeing some equity here. And notice this just went yellow too. All right. Now, we also have bullish divergence in our owl, and we don't have much divergence here. So I'm kind of thinking we may have a pull up pretty soon, but that does not necessarily mean that we can't trade back down with that bearish 5-minute chart. Now, I'm going to look at the 15-minute chart. So our longer time frames are over here, and the 1 minute will always remain on the left. Okay, that's how I work it. So the next thing to look at here is the 15-minute, and you can see very strong owl, red PTF. So more lows are coming. So I want to be probably not taking long trades at this particular point. Same thing with this, okay? This is the 60, and this is a 240. Now, that doesn't mean for the rest of the afternoon we couldn't climb up to 2,600, and that's the end of the day, and we have to close out. We miss the move up. That could happen, all right? And maybe I will take that if we have some fair value gaps and maybe a pyramid to the upside near the beginning of a retracement. Possible, okay? But usually that's a little bit more of a difficult type of trade. So that's kind of where we're at now. Unfortunately, just this sequence in the market has sold off so much that we also want to be careful not getting into a range here. If it goes into a range, then you're going to have fair value gaps, both bullish and bearish, and you're going to get whipsawed because you'll have those form inside the range. And I can't tell you how many, wish I had a dime for every time I got stuck in a range and tried to trade that. So it's kind of it can be difficult when you get into that circumstance. So you got to be really careful here. We kind of missed the move because of the time the room opened. So we're trying to pick up some scraps, and we're going to have to be patient to see what happens. So, if we get an opportunity, why would we want to go long? Well, we took out equity here, okay? We're having a little bit of a bullish response. We no longer have a red PTF. If we get a fair value gap and can get above this structure, okay, that's a long, but, it might just go up here and turn around and dump again. So you don't really have a change in trend unless you get a more significant move up. So I'm going to hold out here. I'm just going to be patient right now. I think what we can do is we can go to the 15-minute chart and see we took out that equity. Where is this thing headed? where do you think the next point is? Well, it could be right here, okay? You know, not right in that area there. There's some sell side liquidity, and notice you have almost a triple bottom here. So you have here, here, and then you have another equity there, okay? So double bottom, I guess. But there's sell side liquidity sitting under here. So we've come down this far. We may get a retracement, engineer another liquidity area here, and then dump again. All right. So right now, you don't want to FOMO into this. So you got to sit on your hands. Okay. I know it's boring, but trading sometimes is boring. Good trading is. Okay. You don't want to be pushing buttons for the sake of pushing buttons. All right. So that's that. So the bias is bearish. A risky trade is trading against the trend. And here we go back down again, okay? Notice here on this, we disrespected this bullish fair value gap. You really didn't have a change in structure because you didn't close above here. And now we're heading back down, okay? So we're taking any equity that was sitting below the point of that pyramid, okay? I can tell you this is very unusual to get this dramatic of a move. We were talking from this high here, 29,933. I mean, that's, 600 points just about. That doesn't happen every day, guys. Okay, so this is pretty intense. However, we could get a strong rebound on this later in the afternoon. So in terms of times, okay, I want you to kind of write these times down here. All right, so, times are kind of important in the afternoon for these algos to kick in. And, one of them is between 2 and 3 p.m. and 3 to 4 is another area. So the afternoon's pretty much covered with 2 o'clock being a big deal. And we're seeing this move down here. We still got, I'm going to put a vertical line at the 2 o'clock point here. Okay. So that is usually the mark of either some significance of something either starting or ending. So we kind of want to pay attention to that. And also 10 minutes before and 10 minutes after the hour, usually you get some type of activity. So we're coming up to we're coming at 119. So, okay. So let's see what happens here. There's absolutely no reason to go long here. And again, I don't want to FOMO into the short position here. A couple things I've noticed in my journaling of my trades is that when I get a breakout and go in here after so many bars to the downside, it's usually a mistake. Okay, it's too late. All right, you need to wait for some type of reversal and usually get it. But with this kind of volatility where you have, an area to put your stop at 29,500 and 20, that's 200 points. Okay, that's sometimes when you have a breakout like this, that's the only place you can put your stop if you're trying to place your stop based on market dynamics. Okay. Yeah, the pyramid's home run today, okay? Absolute home run. First entry would have been right around the point or break, right around 29,800. That would have been a break below here. And again, stop here initially, and then you trail your stop here, 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 and here. Okay. Now, also too, once you have the risk gone from the first trade, so once you have your stop here, then you've actually taken out the risk on the first trade, because if you get stopped out, you make money on this. So you could add on here. This is a great place to add on when the risk is gone, and then put your stop up here for both positions, okay? So if you get stopped out, you're only going to lose on your second entry, but your first entry will be stopped out at break even or profit, slight profit. All right, so what else can I tell you here? These little 1Bs and 2Bs are usually areas of a pivot point, okay? And they're looking at momentum, they're looking at price structure, and that is part of the ARC software too. And again, you don't really want to go long unless you have the owl red. And as long as this is here, red or yellow, you can go short. If this is green, then your short has a lot less probability, and you should lower your trade size if you're going to do that. But, you know, we'll probably get some move up, but the question is, do you want to trade against the trend or wait for the next move back down? And that's also too where price action can help you as well. All right, I'm going to go back to the 5 on this. Wow, what a move down. Okay, so the only good thing about this move is that it's created a lot of areas where there's stops. Okay, longer term investors, short term investors, etc. So they become targets on any type of rebound. So we may be able to trade some of those, but this is where it becomes, it's very easy to get stuck in a range here, and you got to be careful. All right, so that's a nice bar up here, okay, with a fair value gap here, but we don't have a change in structure yet, okay? Some people would argue that this would be a change in structure here, okay? All right, we may be going up to here or even here, okay? But let's just see, be patient, and let's see, because this could also be a manipulation leg here to draw in longs only to take it down again. And that's what we've seen repeatedly, time and time again. So for my situation, I'm going to use the top of this pyramid as the first possibility of a change in structure. And then what I want to see is a move down, possibly another pyramid forming in here. Then you could take that stop down here, that type of thing. All right, I like the bullish fair value gap. That's something we have to see to even consider going against this trend. If I go against the trend and actually take a retracement trade here, we're going to cut the risk down, cut it in half, if not more, because it's a risky trade. Or just don't take it. All right, so that bullish fair value gap got respected. We did not quite get down at consequence encroachment, which is the 50% mark. We have a fairly significant bearish fair value gap up in this level here. And if I go to my other chart, I You can see some of these multiple time frame fair value gaps. So this would be a big one. I imagine we'll have low resistance run up to about 25.18, which is almost 100 points. So that would be an area. If we break through this point here, then that would be an area that it might trade up to before it turns around and comes back down. But we'll see. Okay. All right. So let's just see here what we've got cooking. All right. We went down to consequence encroachment. Now we're coming back up. We got a green owl now for the first time in quite some time. All right. That's here. So let's just look at that. The bullish divergence in the owl is showing it's slowing down, right? Look how long that's been. It hasn't been green since 10:45. So 3 hours. That's 3 hours. So, okay, this is still red over here on the 5. So any move up, we have to anticipate another leg down until things get more bullish. If you're not a counter trend trader and you don't want to do it, then you sit on the sidelines and don't do anything. And if anything, you look for a continuation trade. All right, notice the art software just printed a blue colored pyramid. All right, it's marking the fractal here and here. And it will turn red if prices go below here. And that would be an indication to move your stop down a little more here. However, if prices zoom up from here and don't go below the point, this will disappear, okay? And we may start seeing some form to the upside if conditions get more bullish. So it's a nice visual on price action. All right, so now just for fun, let's just take a situation where, all right, well, let's just say we do get a rebound. Well, where could that rebound go? Well, we may get a 50% rebound right up to 29,644, right? That's a decent amount of profit. So we kind of want to keep an eye on that, right? So it'd be nice to get above here. We've broken a little bit of a minor structure down here. So this was here. I want to see if we have a change in state of delivery. We might, but we just kind of want to rule out manipulation. Could have an ABC and then a dump. Okay, or you could have this where it just never looks back and keeps going. All right, that's the hard part. So in this case here, the pyramids have this as a key level right here, because that's the last red one. So that's an area, if we get above, that we could have a change in structure, okay? So we'll have to pay attention to that and see how that goes. I assume you guys can see the charts okay, right? Hopefully. Move that up a little bit more. Hopefully that makes it a little cleaner. All these bearish fair value gaps are areas of resistance and could turn the market back down. But on the 5-minute, we have if we can get above this here, then we have a very low liquidity run to the next imbalance, which is 29.5. So that's almost 100 points, like I said before. So if we clear, notice what happened here. We have a pyramid here now, okay? That's a good sign. All right, so we have one pointing up and one pointing down. If this gets taken, this is going to be what we call an MP. And then if prices get above here, all right, then we have a situation of a change in structure. Okay, that's a good sign. So you see it just printed as an MP. Why didn't it print as a P? Because we still have an active short trade on that pyramid that's bearish on the left. Don't forget, if you get stopped out here and you were short, you just made like 300, 400 points. So you're walking, you're done for the day. Any long trade at this point has to be considered high risk. I'm not taking anything until we body above. I'm not even going to consider a long trade until we body above that bearish pyramid's flat part. Not wick above, body above. And then I may consider waiting for a pullback after that. We may get another bullish fair value gap when we get above here, and that would be really good. I might take the trade if we get that. But I just don't like, my problem is that sometimes when you're patient, you get a really crappy entry position. I don't like that. Because that could be an ABC and come back down. And we're seeing some selling here again. My recommendation on taking pyramids at all is wait for the body to close below the point of the pyramid. Because the points always represent some form of buy side or sell side liquidity. All right, so what did we do on this price bar? Well, we wicked below here, so we did take some liquidity there. So let's see if we move up from here or not. Minor pyramids are pretty much used for really aggressive early entries against the dominant trend or scaling out. But they are not as meaningful as a regular P pyramid. So this is P, primary trend, minor. MPs used for scaling, super aggressive entries after at least 4 pyramids in the same direction. We've had that. So, all right, let's see what happens. So we're kind of messing around here. And this is where it becomes really difficult, all right? Because if it goes into a range, you're going to see a lot of fair value gaps that can screw you up. Now, we have a bearish fair value gap that formed here. We respected the 5-minute bearish fair value gap here. So, if anything, this would be possibly setting up for a short trade unless we close above it like we're doing now. All right, so that's an inversion fair value gap. That's a big deal, okay? That's kind of bullish, all right? So I still want to get above this pyramid's top here, okay? All right, and what you want to do is wicks are manipulation, bodies are everything. Okay, so now we're closing above that. Okay, well, okay, did we close above the pyramid? We're working on it. Let's see what happens on this price bar. Did that create a bullish fair value gap? It looks like it might have. Okay, looks like I'm gonna wait. Okay, be patient. We're getting a nice move off here, and we have a low liquidity run now to 2,500, which is up in here. It's very easy to feel the FOMO coming in now. That's one thing I'm working on fighting, because this type of trade here looks like it might fit all the requirements of a change in structure, along with the fair value gaps, inversion. But I hate the trade position. I don't like it up here. Stop would have to go here. All right, there's another pyramid there. There's your bullish fair value gap. All right, if we come down into this and it respects it, then we're good to go. However, okay, if it goes below here, not so good. All right, I'm going to buy one here, okay, and I'm going to put the stop under this pyramid here, which is below the first bar of the fair value gap. I can go as high as 2 or 3 contracts with this risk, okay, but I only want to go in with one because I hate the trade position. I don't like going up near highs. Okay, so now we're moving up a little bit more. Okay, so in terms of points, you're up about 13 points. So if you're a scalper, you'd probably get out here. Okay, I'm thinking we have a low liquidity run up here, break in structure here. All right, I'll probably put a sell in here, which would put it right before that and right above this high. So let's see if we hit that. And it may just keep on going, but I don't want to be in it past this point here. And if you employ an Al Brooks deal here, possibly a measured move would put our exit in the measured move area. Okay. Trade still could end up as a loss. Okay. Or we could come back down in here. Okay. And if we do that, we just took out equity here. So it'll be interesting to see. I think we're going to go up pretty close to that 5-minute PDRA here. So I think we may be okay. Oh, where's my stop? I think I might want to move my stop right there in case I just want to take equity out there. Now, if I had more than one contract on, I might take a partial where that sell is and then move the stop up under here, okay? I think I'll cut risk and go a little bit more up under here. Okay, I'm going to go here now. And the purpose of that is we respected this. If we come back down and close below these guys, then that's probably a good sign, because that could be a market maker's buy model right there. Okay, that's not good. See, we took this high out here, and now Seeing some selling, but let's see if it comes back and takes it up even higher. Don't like that wick. I'm going to move it. That's keep that stop right where it is. Okay, so I might have missed it by a tick or two up here. Okay, so we're out. All right, so you know, we made what, 25 bucks on one contract, not a big deal. It still could go up to that other area, but now I'm going to be looking to see if we get into these bearish fair value, or we come down here and let's see if we go back into that bullish fair value gap and see if we get rejection or we just go up from here. Okay, and then we're going to look for any type of shorting situation up there. Okay, here we come down. All right, let's see how far down this is going to go now. So they took liquidity here. I was hoping they'd take it here. They didn't quite get that high. All right, so let's see if we see rejection here. We came down to consequent encroachment right here, and we're still going down. So now if prices close below this bullish fair value gap, that's an inversion. And also, too, when you have a bearish and a bullish one together like this and this, that's pretty bearish, okay? And we could be going into a range. But this is what I'm talking about in terms of, you know, if you get in near these upper levels here, it's really, really risky because this is what you can get. And look at that bearish fair value gap. Okay. Now let's see if we invert this thing. We also have an order block under here. We want to, I have found that sometimes these things get inverted and then go down to the order block in reverse. So let's see here. This is looking bearish, but let's see if we get a bounce from here. Now, if by chance we get a bounce from here and we get above this bearish fair value gap and it closes, that's pretty bullish. That means we may have a more serious, significant bullish correction in place. All right, so far we haven't closed on this price bar yet. Got 10 seconds to go. We have a bearish price bar inverting the bullish fair value gap on the 5, and it respected the bearish fair value gap on the 15, and there we have it. Okay, that still could end up being a bullish bar on the 60. So let's see what happens. Okay, so we did close below it. We inverted to here. I think some people would have taken this short here. I kind of want to see how it does on this order block here. Okay, taking it out. There it is. Okay, we didn't close below it, but let's see what happens here. That's a bearish bar on the 5. And if this thing is going into a channel, then we got to be very careful about not getting caught in all this back and forth stuff. And this is where you can get in trouble. If you're unsure about this, just go ahead and mark the range. And don't do anything inside this. No trades. I want to see if these bearish fair value gaps are respected or not. The owl just turned red. And, you know, while you're learning, or if it's a high risk area, you can just do 1 micron. Just focus on the trading, not the money. And then after you're done, see where you made your mistakes. And where areas become really convoluted, like they are now. And it's sometimes just better not to do anything. So we got a fairly low area range here at 127 that we still may go down to. Okay, so far this is being respected, but notice we didn't close below this order block. This is the thing that screwed me up for a long time, is that I would go short. And then I finally learned by doing it wrong enough times that you need to wait for the body to freaking close. All right, so here we go back up. All right, let's see if we can get a body below consequence encroachment. No, right on consequence encroachment. Still respected though. What I'd like to see here is a big candle down, creating another bearish fair value gap. It might get that. All right, so here's where's our little 2 o'clock line that we had drawn? Over here. Should be here. All right, that's a pretty good size bar right there. But we'll see. Respected that fair value gap. Bearish bar on the 5. Everything is looking pretty bearish to me. All right, so if you went short here, where would you put your stop? I mean, it could go up into this fair value gap here. So what do? Put your stop way up here, here, here. If we break these lows here, I'd put it right here. I am not in a position right now, so I liquidated that long position. I'm glad I did. So when I liquidated that, I have my stop right under here. We already manipulated this one price bar. We came back down here, then that would be an equity take here, which is what it did. It almost took it here too, but that's a big order block up here too. The fact that that held is kind of interesting. All right, so now, see how messy it is in here? And this is what happens, especially after you've had a long run. I mean, you know, this could range, be back. You could lose all your money going back and forth in these little areas, even though they're giving you fair value gap. I can't tell you how many times I've got caught in there, and I'm still kind of getting a feel for how to handle that. You have to remember, even though I've been trading a long time, I primarily was a position trader. I'm not really a day trader. And so when I switched to day trading, it's different, okay? But also too, I started getting involved in prop accounts, and that trailing drawdown. So you really couldn't be a trend trader with these trailing drawdowns because you have to give the market enough room to breathe, but that breathing killed your trailing drawdown. So you had to kind of turn into a scalper. So, you know, I had never really been a scalper. So I'm still kind of putting it all together in the scalping arena. All right, so here we got a bullish pyramid up and a bearish pyramid down, okay? So that's obviously defining the channel. And they're both blue, so that's what they're doing here. Now, if we get a bearish one confirmed, that's a bearish pyramid, I'll probably go short. And I'll put my stop above the pyramid. And the risk is we get stopped out if it wants to go further into the other fair value gap after it takes the equity down here. We have not technically changed structure on the 5-minute. We're still technically bearish. And notice we did close here, but we didn't close above here. So that is kind of interesting, and we didn't get above this major structure here. The other thing too is that we've got a big fair value gap here and then one here. So are we just going to bounce between this area here? So this bearish fair value gap here is the one over here, okay? So if we get above that, and we're probably going back up into the 29.5s, up into this area here. Let me go over to this area here. The darker the color, the more powerful the fair value gap because it's a multi-time frame. So that area there is showing significant resistance there. Okay. Let me just do this too. That's that little trade we made right there. If you made profit today, turn your computer off and have a good weekend. All right. But what we're doing here is we're going to kind of learn more here and see how these fair value gaps work in a consolidated area here and how easy you can get yourself whipsawed in this area. Okay, so we had another NP form to the upside. Didn't really body above it. MPs, for the most part, while they're good for scaling out, good for aggressive entries, they're not the same as the P pyramids. Okay. We got a 1B here. Having a hard time botting above this point here. We get above here, we probably have a pretty easy run than 2,500. Okay. Well, let's see what we do on this. Okay, so we inverted this one. But notice here, the interesting thing here, do we have any fair value gaps bullish in here? No. I don't like that. I want to see a bullish fair value gap. I'm about to go long on this leg. We don't have that. Not yet, anyway. Let me just check. I don't think we do. No. All right. So big wick here on this bar. When the bar jump, me personally, when I see the bar start to get wackadoodle, I think manipulation. So we're going up to this imbalance. Looks like we're going to take out that previous bar. Let's see how far in we go. This is not even a fair value gap here. No bullish fair value gaps yet. On the 5 or the 1. That just, to me, says no longs. If anything, maybe getting ready for a short. If we get a pretty good sized bar here and fair value gap in here, then that's a good sign for a short. Let's see what happens here. And again, we could go up to that 25 level. Do not interpret any price bar until the close. All right, so consequence encroachment was respected so far. The bearish one up here. All right, we're right at 2 o'clock. We hit our little vertical line. Markets usually start to the algos usually start to kick in right about now. Okay, we got above the bearish fair value gap here on the 5, and that's kind of an interesting one because it's an inverse. See that? We got 10 seconds to go, so that bar looks like it's going to close above that. I think maybe we go to 29,500-ish, maybe a little higher, and then possibly see a turn to the south then, or you have a new move back to the upside. Do we have a bullish fair value gap? No. Nothing here. It's a slow grind up. We could be getting one forming on the 5, though, right here. We'll see. Once we get a big bar down. Bearish fair value gap so far is still respected, even though we did close above consequence encroachment. It still was respected. Right, now we're moving back down. Notice the 5-minute here. So if it continues a little lower here, that will take out the bullish fair value gap there, and we'll see. Still no bullish fair value gap on the 1-minute. Maybe a slightly little, not much of one on the 5. Little weak one. Sliver. That's all I need, though. I'm just concerned that there's no bullish fair value gaps. That's usually an indication of manipulation. Not necessarily a change in direction of order flow. Okay, so let's see what we got going on here. Good. Let's see if this can stretch down. No bullish fair value gap now on the 5 if possible on this price bar. This is good. This could be our first bearish fair value gap. Oh, look at that. Okay. Let's see what we got here. 9 seconds to the close. Okay. Let's see if we can come up halfway or so on this. There's your another bullish fair value. I'm going to go short one. Okay. That's a quick scalp for 10 points if you want to take it. Let's see if we can begin something a little more fun. 23 points. Where does that stop? Where does that need to be? Probably right about here, right? Okay. So did we take equity down here? We did, I think. Let's see what we got here. Let me bring my data box over here. What do we got for a low here? 405 and 405. We matched it. We didn't take it. So regardless of how this trade turns out, notice we didn't have any bullish fair value gaps. Okay. Have this one down here. Very bearish on the 5. Move this to here. Put this right at the breaker right here. See what happens with that. Hopefully I don't have one stop too close. But I don't think we should go back into this fair value gap area. Okay, we took the low here. I'm going to move this here in the profitable territory. And I think probably, let's see if we get hit here. This one. Okay, we're out. All right, so now we're up over $100. So notice at 2 o'clock, look at that. Isn't that something? It's probably going to go lower. If it comes back in here, I might go short again. But look at the 2 o'clock time frame. I'm telling you, folks, it works like clockwork. These times are exactly when algos kick in. I think probably we'll take the bottom out here. I was hoping we'd come back up here and I could add in a little more, but I don't know if I'm going to get the chance. Anyway, that's a problem I have to deal with is my, what I'll do is I'll analyze this trade at the end of the day and see if my fear is overriding, which it probably is, what I should be doing. Liquidity's down there, so I probably could have held it there. I got out here because there's a big order block here, but we did close below here. But I have seen that act as a level that it respects. But that's a very bearish bar on the 5 and very bearish on the 15. So I'm going to go short again if we get up here. I'm thinking if I was short retail, I'd probably have my stop here. So let's see if they come up and take that out. So what was that? That was, where did we get in? About 28 down to 86. Not a bad little move right there, about 50 points. All right, so here we come back. All right, so now let's just say you got out like I did. And, you know, it's kind of like you're kind of waiting for the next thing. Wait for equity to get, you don't have to go back in. You can wait for some major equity points to get taken out and then look for another reversal after that. It's definitely a bearish price bar on the 5 minute, okay? And the 15. So the long-term charts are bearish. But that doesn't mean we can't go halfway up on this price bar in the 5, which would put it into this area where I want to maybe go short again. All right. So that was kind of a scalp. I would say I have a low liquidity run right down to here. Easy. Market maker sell model kicking in here. I'm going to go one more time in here. All right, so where should the stop be? Here, where everybody else's is, up here. What do you think? We made a new low. I think we got to put it in here. Yeah, too much button pushing. Giving back my money now. All right, so let me see where my stop is. Not a good place. Not if it decides to go up here. Kind of screwed that up. mean, I still may get it, but see how this formed a bearish fair value, yet my stop should be way above that. Come on, take that liquidity down. Everybody trapped to the long side. Take it. You want to take it. You want to take it. Beautiful. I'm glad I went back in. All right, so that took liquidity. Now we'll see what happens after that. And now we're up about $150. I'll be right back. All right, so I'm not sure if that last trade was that great a trade because we were so, into the move down. I mean, obviously it worked, but and it looks like it's going down a lot further. Okay, but and here's another bearish fair value gap. But I should have just never gotten out. Probably I should have just stayed with it, but I added back in there, and so be it. So here's the liquidity on the 15-minute. I don't think I'm going to chase it. I mean, that's a market maker sell model right there for sure. So it probably is going down there. I just don't like going back in when it's this low like I did before. So I think for me and my personality, I'm going to be happy with these wins and journal this stuff and see. If anything, this trade here, not so sure about. All right, this trade here, we kind of knew was risky there, but we had a low resistance, liquidity run up for a ways. Bearish, I think we're still going to go down. I think we're going to pound down here. Okay. So you see, since I got out, we're already down another 80, 60 points. So definitely, got out too quick. But in any case, it is what it is. We have a red PTF, so we're pretty good for more lows here. So some of the good things to take away from today, okay? One is realizing that 2 o'clock's an important time, right? So we kind of did that right. That's cool. Okay, so we did the 2 o'clock thing right. All right, so, and then after that, we got the big move down. All right, so what did we do wrong? Okay, well, actually, this entry is pretty good here. Okay, we went down to this order block. Okay, I know why I did it. I got out there. This one here was just get out when they take equity in case they reverse it. But honestly, that was more fear than anything else because we had every reason really to stay short. We had a bearish 15-minute bar. We have liquidity sitting under here. And we had a bearish fair value gap respected on the 5 with it. So, you know, when you journal that and look at it, the idea here is that we still need to work on staying with trades when the science says to, right, versus getting out. So I would consider this getting out at equity, but it's a process, you know. We're all in here to continue to be better. And the idea behind this is that when I journaled this, this really was getting out on fear, okay? Because had it reversed here, then it probably would have gone back up here, and then that could have been a losing trade. And, you know, you kind of get away from thinking like that. But it's real. That's the emotions you feel. Okay, so let's hang around a little longer and see if we take out that. Let's see if we're right on that 15-minute draw to equity line, which is the gold colored line, orange colored line, what we want to call it, down here. I think, you know, we got a shot out of it today. I only left about 100 points on the table. Oh, man. Okay, so 359, yeah, quite a bit. Okay, is what it is. So this was a classic area here. At least we did this right. This was a market maker sell model. And we scalped it to here. So, okay, that's okay. All right. Be happy with that. So we interpreted that correctly. But the longer term charts were bearish, and we probably should have held that. And that's what if you trade with multiple contracts, you can scale out there. I mean, don't forget, we've only done one contract today. We're up $148. That's not so bad for one micro. So if you're starting out and you're trading one of those $50,000 prop accounts, you see you can make 150 bucks with very strict risk control, and you know, that's not too bad. But when you do more, you can take partials then. So I just want to see if we're right, and we're going down to this equity line today and see if we get a reversal. We may have a long trade in a little bit. By the way, Bitcoin's at 60,514. And if you've been following me for a long, long time, year, half a year, months, our target for Bitcoin is 50,000-ish. P&L, here's a P&L sheet here. Okay, so $148. $152 minus commissions. So Al Brooks measured move should put this thing right on that equity area there. Now, if I decide to go short here, that'd be FOMO. Okay, so we don't want to do that. Just let it play out. Let's just see if we're right. And because we could get a reversal back up and we would be stopped out if we had any type of risk control. So, you know, when you're in this stage like we are here, okay. All right. So, you know, wishing we'd had stayed in. Don't get tilted, okay? Instead, the next opportunity really is if it does what we think it's going to do, which is go down here. And we just can't create a trade based on any type of structure. I guess we have another market maker model here. You could maybe go short there. But I would rather wait until we breach this and see a violent move back up, because you could make a fortune if that reacts to the upside. And sometimes they miss it. Sometimes they come really close and then reverse it 50% and then come down and take it. So it's a little tricky. I will say one thing. It looks like on the 1 minute, we are getting another market maker sell model here. So if we break below here, that'll be a big move down here. And we'll see how we're doing on that. I'm still kind of working on becoming comfortable trading those. So I like to watch right now. Watch and learn. Meantime, I'm going to get a cup of coffee. I'll be back. Stuff is great, though, isn't it? I love this stuff. All right, be right back. Okay, I'm back now. All right, so we're moving on down. So looks to me like this was a market maker sell model here and here. All right, so we're moving on down to here. So I've got my 2 winning trades, I think, for the day. I think until we take equity, I'm not going to trade this far close to taking equity. But like I said, we can watch. All right, here we go. So I did a measured move from here to here. Okay. Look, we got a pyramid here. Okay. Run that market maker buy model. So I think we're probably coming down here. That would have been another 110 points we got right out when it took equity here. Ay. All right, PTFs are both red, so we should be heading down there. Notice it turned red right after we got out here because it was yellow before. All right, so here's what it does sometimes. Sometimes it gets really close, draws everybody in, only to go into a reversal. And even though it will take equity, it may do something like this and then drop down. And so that's why getting in late or foaming in is usually going to put you in a bad entry position. So you want to fight them. We got 2 good scalps today on one micro. The reason I like to use 1 micro is to show you that if you're a new trader on a prop account, do the 1 micro, right? And use good risk control. And while you learn, and you'll have some skin in the game, but at the same time, you'll feel the pressure of real money because of, you pay for the prop account, and you'll learn. And if you can create the discipline to walk away and not overtrade and be happy with a win of any type, provided you learn something, that's a win. Otherwise, if you're going to over leverage and all that kind of stuff, you'll blow the account. You'll be more worried about the money and your anxiety than you will about learning how to trade. All right, so and again, if you're just showing up, notice at 2 o'clock, the afternoon algo kicks in, and look exactly what happened after that. And at that time, I wasn't sure if it was going to kick in and go back to the upside or the downside. That's why, I waited until the first bearish fair value gap after the 2 o'clock formed here. So, because I went in here and then scalped out here, and then went back in here and scalped out here. Okay. Scalped here and here. Okay. So, there were no fair value gaps bullish up here. So that's a telltale sign. But as soon as we hit 2 o'clock and the market rolled over, we got a bearish fair value gap. And then look, dump. While we caught some of it, we didn't catch a large part of it. And that's because of fear. And, you know, scalping at this bottom and being afraid we were going to get a reversal after coming at that bottom, even though the longer time frame showed bearish. So it's in the journal today. So I imagine this will take out this equity here. The next algo I think that kicks in is around 3 o'clock, 3 p.m. We may see a resounding move to the upside. Here we go. All right, so let's see how far down we're going to go. Let me just go over here real quick. I know I drew this point on 2 equal lows here. Got another one here. Let me just put that one up there too, just in case that becomes a point of interest. Even though that pyramid so far is profitable, all right, because I used it for a scalp or whatever, it did not form at the beginning of the move here. Price structure just was not there for that. But it did form on the market maker model here. All right, so a little bearish fair value gap that just formed here. Again, red PTFs. I think we are in another market maker model. Maybe the last one until we take liquidity out here. And that would be here. Drop. Also, too, when you're watching this, learning, think about where your stop would be. Mine would be above the pyramid, right? Anything closer, and I guess you could put one here, but anything closer might be too close. Maybe here, if you want a really tight one. Yeah, I guess probably right here because you took out this low. If we take out this low, then you can move it to here. Now, if you're just starting out and you did what I did and got out right when we took equity here, it's okay. Okay. But you should continue to watch like we're doing, and that will educate you further. In the beginning, it's okay to go for the low-lying fruit and go for 5 to 10 handles and be really happy with that while you learn. Okay. So 382, 358. Okay. That's a profit. All right, so on the 5-minute, we've got a bearish fair value gap. Consequence encroachment on that one, if it decides to pop up here, is 363. Geez, really? 363. So that 363. Wow, that's way up here. Okay. Yeah. Now, the hard ones are when they don't take equity and then they take off to the upside. The A plus setups is when they take up the equity you're anticipating. All right, so definitely price is spooling down to that equity level. You cannot deny that. There it goes. All right, so the PTF just turned yellow, okay? So that means the momentum that's driving this thing down isn't quite as strong as it was earlier, but it did its job. Took out the lowest low in the red area. And when it did it, it didn't have the momentum it had before, so it turns yellow. Now, if prices dump and continue to go, that may turn red again if the momentum picks back up. We'll see. Looks like we left about 200 points on the table. Ouch. But again, you have to be okay with that. That was a scalper down to here. Let me just take a look at some things. So let's just take a look at this for a minute, okay? When this thing goes back to the upside, where do you think a lot of sell-side liquidity is sitting? We'll just use the 1 minute for a minute. About right here. A lot of equal highs. So that's about 2,500, and look at that, right above here. So I would think when we take equity and we get some fair value gaps here, we target that area there maybe. We got one more dump. Market maker, sell now maybe. Yep, going lower. Okay, here it is. I think this is when we'll hit that target. 15 minutes. That's 5 looking. Red PTF. Red PTF on 15. So it's momentum slowing down on that 1 minute time pretty dramatically. There it goes. So I'm going to be really interested to see if it's shooting for this one or this one. And we won't know until we get there and see a turnaround. At least I won't know. Oh, we had a win of a day so far. Okay, let's see what we got going on here. I think when one of these equities, when it's done here to the downside, we may see an incredible move up towards the end of the day here. We're coming up on the 10-minute to the hour, so usually that is a dramatic time. Look at this, we're going right down there right now. See, this is spooling down. Just, you know, you got your fair value gaps here, but now it's just spooling down. Look at that. And look at all these little areas here. Market maker, accumulation, distribution, accumulation, distribution, all sell models. Okay, got very close. Hey, I got to tell you something. Okay, we're starting to see a little bit of reversal action here. You're not really seeing it here, so you could hold it if you wanted to, certainly. But let's just think of the reality. I don't know where your stop would be. Probably here, above this area here. So 235. I mean, it's 100 points away. Okay, so if you're within like what? 148 to 20 points of the range. Do you want to risk that much for just a few points? Probably not, right? So you put your stop here, right above this thing here. Here we go. Phenomenal. Just phenomenal. Okay, so we were right on the location, okay, of where this thing was going. So that's kind of cool. I love the fact that it happened at 2 o'clock. That's kind of cool. And that's all stuff that ICT teaches, you know. So I know a lot of whatever, but I think he's spot on. But it's still an emotional game because even though I had a feeling it would go down here, I got out here. Okay. I took the scalp instead. So what I want to do is kind of work on keeping trades a little longer when my bias makes sense like that. And I'll work on that. It's a process. Okay, so I think we hit it, guys. We hit it. We hit it. Red PTFs now. Just went red again. So what does that mean? Does that mean we're going lower? According to that, it is. According to this, it is. So we'll see if we get a rebound up and then another push down, but it may just keep going to that second orange line, or at least the measured move. So this is a measured move line from here to here based on that large candle here. No, that's not a measure. That looks longer. Hold on a second. I think I'm wrong on that. Yeah, it's 1.5. Like, geez. So it hit the measure move. All right. All right, so it hit the measure move. It's still going down. So that would have been an area I would have taken my profits if I was aiming, staying in the trade that long. And so from where I got out, okay, so that was what, 360 down to here. That's 200 points, 260 points. So just on 260 times 2 on 1 micro, you could make an additional 520. That's 1 micro. So all you guys trading those $50,000 profit accounts, all right, take note of that. You can maintain really good risk control and still make quite a bit of money. All right, so now we are reversing off that area here. We got a red PTF and a red PTF. So that kind of means that any retracement here may be met with one more push down. Okay? So I'm going to get rid of the measured move here. And that's a fair value gap right here and an inversion here. See that? That's not the reason alone to go into the trade. We don't really have a change in the structure up from here, but that is a nice looking situation. Let's see what happens. If we close below here, okay, then we may be heading down further here. I mean, that's, the OWL and the PTF are very bearish. And we do not have a fair value gap in here, okay? So once again, we inverted that bearish one, but have not created a new one yet to the upside. So I'm very suspect. What I love about today was that my bias was correct. Now I just got to work on the emotional part of staying with the trade. And the more I see my bias right, the more confidence that gives me to do that. But it's a process. So for right now, I take the scalps. And you can be profitable doing that, but also too, see if your bias plays out. All right, let's take a look at the, all right. See all these, this is the 4-hour chart, okay? Big price bars, but what I care about are these bars here. That's bearish, 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 bearish. All right. Bearish, 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 bearish. Right. And this is obviously what we've been looking at. That's the 15 and the 5. Okay. Everything has a red PTF. Okay. So don't even think about going long here. Okay. Can't do that yet. And now look, we're possibly getting another pyramid here. So even though if you went in late here on the pyramids, okay, if this one forms down here, you would have your stop adjust down here, and then this would be your profit right here, which would be what? Pardon my straight lines. Quite a bit, okay, 50, maybe 80 points. You get stopped out. Okay, it has not been confirmed though. Prices have got to go below it again before the stops can be moved. Now, if prices go above the pyramid here before going below, it'll go away. All right, do we have a bullish fair value gap? No. So I think probably any retracement is just going to be that until maybe 3 o'clock. All right, well, I think we're going to wrap it up, okay? Oh, now we got a bullish pyramid here. We're going on about 2 hours. I mainly wanted to see if that bias was correct on that one. And I think we actually might have to wait a little bit longer. We got 3 o'clock pretty close before we get any type of confirmation of a good rebound here. All right, there we go. Okay, that's interesting. A bullish form there. All right, so let's see what happens with this price bar. See if this gives us our first bullish fair value gap. Okay, good potential there. Love the pen bar here. I don't like the red PTFs here, which means we may get a dip below and take out that pen bar on the 15-minute one more time. But we'll see. inverted those 1 minute bearish fair value gaps. We haven't inverted anything over here yet. We don't have a break in structure. Technically on the 5, we do here where the pyramid formed. Got 18 seconds left on this bar. Fills this gap, and we still don't have a bullish fair value gap. Yeah, it's filling it right now. Nope, no bullish fair value gap. You see why you got to wait for these price bars to close? Well, teeny baby one there. Okay. Did print a teeny baby one. Okay. Okay, so one requirement met. We did take out equity here. I don't like all this. Still bearish. Okay, baby fair value gap being respected here. Now we've got a bullish owl again, but bearish everywhere else. So this thing has to come up a little bit to prove itself some more. Usually you see more decisive bullish fair value gaps if this was a significant equity grab. So I'm wondering if it's going to go down again from here. And we have bearish PTFs all around. So all right, so we're coming down 50% on this 5 minute price bar here. Sometimes these wicks that take equity out kind of act like fair value gaps. So they come down to the wicks consequence encroachment, which is the 50% mark. And then we get a bounce off that. And if the bounce off that creates a fair value gap, then we take notice of that. It's a possibility. I personally think we could get a little rebound here and then another move down, but the rebound, not so sure how high it's going to go past these bearish 5-minute fair value gaps, but that's 100 points, 200 points. I'll tell you, with this stuff, you have to be so damn precise, because if you're wrong, it'll cost you 50 to 100 points. Okay, getting a little bounce off that 50% encroachment. But, this bullish fair value gap, disrespected for the most part. So I'm just not, now we're getting another pyramid here. I'm just not feeling it. But you're going to get some type of big move towards the close of the day, because everybody's going to be covering their shorts that are short. Look at that move. Holy camole. Wow. Just wow. So when did we come in here? About, I guess, 12, right around here. We had such a big downtrend already that, geez, going short was psychologically tough. Going short and holding it, put it that way. Okay, so looks like we're going to maybe go above here, but I don't see any bullish fair value gaps that I like to see. Okay, so we're at the 3 o'clock hour here. Come on. What are we, 310? 310. Okay, you have 2 more back-to-back pyramids forming here, indicating a range. When you have a sell-off this dramatic, you're probably going to get a push to the upside at the close, because people got to cover. And because the trend is so strong down, that they may just keep it short right to the end. Or unless they see a move, surprising move up to the upside. I think most people would have taken profits here. Smart money would have taken profits here. Call it a day. Especially since it's a weekend. Now, technically, if you're using the pyramids, you'd still be short. Stop would be up here. But you see, here's the thing. Now that some of the prop firms do have end of day drawdown, you can trade the pyramids. But before, when they're intraday, you can't, because let's say if it goes up here, all right, then stops you out here, your intraday would go down by this much. Okay. So, you know, you got to, it's a difference. It had to be more of a scalper. All right. So here we go. So if this pyramid turns red, it will be a P. And all right, there it is. So your stop would move from here to here. So that's where your stop would be, right there. So your profit on this would be from here to here. So even though the pyramid formed a little late, okay, it's still a profitable trade. And it looks to me like we're heading down because now we're seeing bearish fair value gaps again, right? I think we're going to take out that bottom again and then see a really big move back to the upside. Towards the close. There's a bearish fair value gap. All right, so we're going to take out the low, probably that bar pretty soon if we didn't already. All right, notice we did take it out. Notice the PTF turned yellow. Okay, so it, you know, again, predicted another low and it was right. And it's right about 75% of the time. So every time you see it go from either a red to a yellow or a green to a yellow, it was right. You know, and then when you see it go from a green to a red like here, that means it didn't work. So, you know, it's right 75% of the time, not 100. But that's pretty good in the markets. All right, so now, for those using the pyramid, your stop is here. I think we might be going down here. I feel sorry for the traders that were trying to dollar cost average of this one. I'll bet there a lot of accounts were blown today. This is exactly the kind of trend that would do it. All right, so we're taking out that low again. And our second area of equity is this line here. And let's see what happens. Now, if we get a reversal here and turtle soup this bottom here, that could be as well pretty interesting. But I think we're going to that second equity. I think that's where we're headed. I mean, look at the 15-minute. It's just so bearish. 5-minute too. So yeah, the pyramids work great on the 5-minute time frame too, as well. Look, initiated here. What's that? 8 a.m. Look at that. So if you got in on the 5-minute time frame, not only would you have been profitable in the 1 minute, but if you use the 5-minute, you would be getting in here at about 30,000. Stock would be up here, and then your stock. Hold on one second. All right, so we got another pyramid here. So this stop would go here down to here. So, what is that? That's 3,200. Man, that's huge. It's 500 points just on those pyramids. All right, let's see about that area of, we're thinking it's going to go here. Here it goes. Wow. So guys, for the new traders, if you took 2 trades, because I like to take 2 trades in the afternoon, you go for the low-lying fruit, you're profitable today. All right, you sit and you watch and see how the market plays out. But try not to overtrade, okay? Look at this, going right down to that area here. There is more risk when you go for more handles, and that's okay, but you need to build up to that. All right, let's see if we get this. We're going to take this. All right, this would be interesting to see. This is this equity level, and there's more down here. Okay, not saying they're not going to go down there, but and the PTF says they are. But this is a level they're shooting for right here. So this is a 60-minute time frame, and you have equal lows that we took out there. And then, whoops, sorry. And then we're approaching this here. And wow, didn't waste any time getting down there today, right? It's like a 600. So this market just dumped today. I mean, literally all day. Wow. All right, so here we have that. Go back up here. I got to say that PTF is going to stay red, even if we take this equity out here. Oh my gosh, it just turned red again over here. Not done. Any rebound from here is going to be temporary. All right, I don't see a rebound trade. Not till really maybe very, very late, but not with these, not with the PTF staying red. You will get a rebound trade, but I don't think you're going to get a huge move up to retrace a lot of this. All right, I think I'm going to call it. Okay, so we had what, 2 winners today? I think we have 1, 2, 3 winners. Okay, 3 scalps, quick scalps. So what was that? $150 on 1 micro. All right. So okay, we'll take that low-lying fruit. We'll take that. If you held this micro further down to these equity levels, all right, that would have been another between $500 and $700 for 1 micro. So don't forget, micros are possible. All right, even just 1, especially as you're learning. All right, we got a little bit of a wick here, tail coming in here. But notice the PTFs are still red. Yep. So let me get one more push down. Okay. All right, you guys have a good one. This was a fun session. All right. Things we did right. Our bias was good. Risk control was good. We took 3 trades. That's the limit. So we stopped there. That was good. So risk control, discipline, control emotions, learn. That's the key. All right. We'll see you back next Friday. Thanks so much for being here. And I hope you enjoyed this time together. And we'll see you next week. Have a good one.